Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the broader market. So a big day for the bulls on the backs of some news that the Fed is going to expand its bond buying. So pretty much just the Fed throwing out another reason that they're going to keep everything held together as long as they can, throwing the kitchen sink at the market. And we'll get back to that in just a second. We started this morning looking for the bulls to show up, but they certainly showed up more significantly than anticipated. We were looking this morning at an hourly trend change. The size of the bounce from the overnight low was significant. So we were looking for the higher low to form. And then as soon as the bell rang, a little bit of positioning by the sectors, bull break to start the morning. As soon as we change the hourly trend, we zoom out and we look for a 4-hour lower high compared to 30.88. And we were watching the 12-hour exponential resistance. The bulls kept the 15-minute uptrend strong all morning. And then here's the news dropping at 2 p.m., which was a final big push up. We consolidated into the afternoon, a little bit of a bounce, but pretty much what we're watching overnight, are we going to break this 4-hour lower high of resistance, or are we going to reject? If we reject, we have an inverse head and shoulders pattern that we're going to be watching, and we're going to look for a 4-hour higher low to form, and the trend change to tell us that the daily bounce is underway. If the bulls pull that trend change off, we zoom out, and we look for a daily lower high compared to the high of the entire bounce, 32.32. So what does that look like on SPY? It's not as clear, which is why I'm using the futures chart and the 4-hour time frame, because I feel that has the most clarity. But as far as SPY is concerned, here's the 4-hour chart. 309.08 was resistance. We topped out at 308.28 on the news reaction. And it's just a question of, do we have to consolidate overnight tonight? Note that we did not change the hourly trend on SPY. We opened at a lower low, and then we just shot straight up all day, 3% from that low, and never changed the hourly trend. So I would not be surprised to see some overnight consolidation and need to see follow through from the bulls into tomorrow. We had a whole bunch of individual names just looking for daily higher lows. Apple in the tech sector, daily 12-period exponential support holding. Amazon, same story. Tesla, same story. BYND, same story. The strongest names are forming daily higher lows. They're holding their daily 12-period exponential supports, and they had a big green day today. So as far as the market as a whole, what we're watching for from here, and again, as I talked about last week, at the end of last week, the bears must prove follow through with a daily downtrend. And it's going to be even more meaningful psychologically if that were to happen now that this Fed news is out there. Because if we were to see a bounce, fail to break the high of the COVID bounce, and then drop to a lower low confirming the daily downtrend, there's going to be a spike in fear where everybody says, wait, what's the Fed going to do now? What ammo does the Fed have left? Are we going to start seeing them buying individual stocks or individual stock ETFs, or what? Where do we go from here? So the burden of proof short term is on the bulls to break that 4-hour resistance and to confirm an hourly trend change on this bounce. The burden of proof longer term is on the bears. We have to see a daily lower high and lower low for the bears to prove anything to us. Again, the big drop last week was notable. Absolutely. We saw a lot of different things changing, the correlations. Right now we have the market, the S&P 500, oil, gold, silver, Bitcoin, all correlated and all doing the same thing. That's very notable to me, and we're going to have to see the bears prove it. Because if they don't prove it, it's a 2-day drop with a lot of volume and a lot of fear, and yeah, that drop made a lot of noise, but if we don't follow through, it's just an impulse move, taking out stops and triggering those stop levels. And if we do not see the lower high and lower low, there is no trend change for the bears. IWM, big bullish candlestick today. We did break 141.03, so we're now back in gap fill territory, and the gap to fill is 145.90. Again, just like everybody else, we are just looking for a daily lower high to form compared to 153.39. Once that lower high forms, again, there's multiple scenarios. V-shape to higher high, that is not likely. Significant bounce and tightening daily range, that's entirely possible. And then bounce into a lower low, confirmed daily downtrend, that's possible. So those are the different scenarios that we're watching for. The more bounce follow through that we get from here, the more likely a tightening daily range will be, in my opinion. QQQ, trying to set the daily high or low today was not an inside bar because we broke the low of Friday. But again, we haven't changed the hourly trend for the bulls. We must see a clear hourly higher low and higher high. Then if that occurs, we zoom out and we watch for the potential of a daily lower high compared to 247.82. If any sector is going to see a higher high from here, it's probably QQQ, and that's just due to the distance required to get there. QQQ needs to go under 4%. IWM, to get back to the high, has to go 8%. SPY to get back to the high has to go 5 and change. So we can use that information. If QQQ breaks to a higher high first, it's going to change our probability needle. It's going to say, okay, if QQQ gets the higher high, the odds that SPY can just go straight to a higher high will increase. If QQQ rejects and tops out, then we know it's very unlikely that many other names are going to be able to break their resistance if the name that is closest percentage-wise struggles to do so. XLV Healthcare, again, we haven't changed the hourly trend, so this isn't a very convincing bounce yet at this point. We have to hold the low of today, break the high of today to confirm the hourly trend change. Then we zoom out and look for a daily lower high compared to 104.22, which is 7% away and a long way for the bulls to get. XLF. Have we changed the hourly trend? No. Everybody just shot straight up today. When we change the hourly trend, if we do, we look for a daily lower high compared to 26.83. The daily lower high is not the thing that I'm watching for. I mean, I'm watching for it, but it's not the make or break. It's can we follow through to a lower low once the likely lower high is set. I'm confident in daily lower highs. I am not confident if the bears can confirm the daily downtrend, which is why every single day is going to give us a lot of information. XBI, bounce underway. We held the low of Friday, so this is a more convincing hourly trend change. Low of Friday, high of Friday bounce, higher low today, and then a break of that Friday resistance. So you can call that an hourly trend change. We zoom out, anything under 106.08 is a daily lower high. That's currently about 3% away, and we will need a daily trend change back to the bulls for a weekly higher low to be established. But as of right now, this weekly consolidation, there are no red flags there. Back testing, holding exponential support, and giving back a percentage of the move up that is not very significant. Bulls would love for this to be a weekly higher low being established. SMH has to change the hourly trend just like everybody else. Straight shot up today. And then we're going to look for a daily lower high compared to 154.73. The VIX, double top, 44.20, 44.40. And now we're looking for the VIX to give us a daily higher low compared to 23.05. And if we're looking at the leveraged ETFs, inside bar today on TVIX, if it breaks bearish tomorrow, have to set the daily higher low. Gold. So gold saw weakness. Look at where the gold bulls showed up this morning, right when the bell rang, and the S&P 500 bulls proved themselves. And then where else did we see volume? 2 p.m., there's our news spike. So gold reacting to the S&P 500, very correlated. Daily higher low is trying to form compared to 1670, and the bulls need to change the 4-hour trend back in their favor. Right now, anything under 1743, just a 4-hour lower high. But if the bulls can change the 4-hour trend back in their favor, a daily higher low will be set, and the bulls will then be working on a daily trend change back in their favor to put an end to weekly consolidation. Silver today confirmed our head and shoulders setup that we were watching, but the bears saw no follow-through. So we confirmed the head and shoulders on morning weakness. The S&P 500 bulls showed up, and so the oil, gold, silver, Bitcoin, everybody showed up in correlation with it. 15-minute time frame, we can see the open very clearly with the bull move in volume and the 2 p.m. news very clearly. So what do we do when we see a confirmed trend change and no follow through? I still want to see a 4-hour trend change for the bulls to regain control, but we zoom out and look for the potential of a bull flag. And right now the weekly time frame for silver is a potential bull flag. So if we can change this 4-hour trend on both gold and silver back to the bulls fairly quickly, we will have potential weekly bull flags and the bulls will be very comfortable. Miners, GDX today had a great bottom fish with 5-minute and hourly oversold conditions off of the low of last week, and it was actually the low of 2 weeks ago, 31.22. We held that support level by 10 cents and then shot up 6% plus. If the bulls can break 34.92 from here, we change the daily trend back in favor of the bulls and we set a weekly higher low after back testing and holding exponential support, keeping the weekly consolidation healthy. Again, the size of the move, we went up $21, and the size of the pullback, so far we pulled back $6. So the size of that retracement is certainly keeping the bulls healthy, but we do need to confirm the daily trend change to have the confidence that our weekly higher low has been established. Oil, again, let's just check those correlations. When did the bulls show up? When the market bulls did. Volume spike at 2 p.m., another leg up, all correlated. 4-hour time frame, have to change the trend to the bulls. We did break 4-hour resistance, so very similar to the S&P 500 futures chart, but we broke resistance, whereas the S&P 500 is rejecting from resistance for the time being. If we change the 4-hour trend, it already looks like our daily bounce is underway with key resistance 39.89 and 40.42. Keeping in mind the weekly consolidation is a potential bull flag at this point. Very healthy and very minimal. Natural gas, bears, still strong. Yet another rejection for the 10th week in a row from weekly exponential resistance. Support is 1574 and 156. And the bulls must close over the weekly 12-period exponential resistance to get my attention. So, and just one more, let's bring up Bitcoin to show the proof of these correlations. When did the Bitcoin bulls show up? Where's the volume? 9:30 a.m. when the bell rang. Volume spike 2 p.m. with the news. The 15-minute time frames just overlaid Bitcoin, oil, gold, silver, miners, S&P 500, you name it, correlations are significant. So one more little recap. Bullish news. Short term, the bulls need to confirm hourly trend changes to see bounce follow through. And then from there, we will zoom out and look for daily lower highs on most names. From there, the bears would have to prove a daily lower high and lower low. If the low of last week holds all this week, it's a win for the bulls. Burden of proof is on the bears. They gave us a 2-day big punch to the mouth to the bulls, but it's going to take more than that to knock the bulls down. Have to follow through. They surprised the bulls. They sucker punched them. Can they go the distance and confirm a daily downtrend? That remains to be seen. And curious to see what the overnight S&P 500 futures chart does with regards to its 4-hour resistance, which is currently still in play. Have a good rest of your day, and we will see you tomorrow. Do good things. These are the microgreen sunflowers that I was eating 3 months ago.